The IRS just announced on Friday that we're going to be able to contribute more to our retirement accounts in 2023 based on the adjustments from inflation in 2022. This is really exciting news for people on the FIRE journey like me because we want to maximize our retirement contributions every year so that we can secure our retirement. I want to show you what the IRS just said in this press release about the 401k and TSP contribution limits, IRA contribution limits, and the Roth IRA income limits. I'm also going to show you how I plan to adjust my retirement contributions so I can retire early by age 45 and have multi-millions in retirement assets when I turn 59 and a half. So the article states that the employee contribution limit for 401k will jump $2,000 from $20,500 to $22,500 for 2023, which is the largest increase ever in terms of dollars and percentage. And this is going to impact roughly 60 million Americans with their 401k plans. And if you have a TSP, 457, or 403b, their contribution limits will mirror whatever is adjusted for the 401k. So you're going to see a contribution limit increase to $22,500 for 401k, TSP, 403b, and 457. The catch-up contribution, if you're 50 or older, will increase by $1,000 from $6,500 to $7,500 for 2023. So if you're 50 or older, your total contribution limit for the year 2023 is going to be $30,000. And based on these adjustments, the maximum 401k contribution limits between employees and employers will be $66,000 total or $73,500 total if you're 50 or older. And if your employer doesn't offer any match, then you just have the personal contribution limits. And if your employer does offer the match, you have $22,500 from your personal contribution at traditional or Roth, and a certain percentage of your income is contributed by your employer in pre-tax dollars or traditional only. So let's just say that you have the TSP and your income is $100,000. You can personally contribute up to $22,500 in Roth or traditional, and your employer will contribute 5% of your income. Then that's an additional $5,000 in traditional to your TSP, right? That $22,500 and $5,000 are included in the $66,000 maximum the IRS allows you for the year 2023. If your employer allows you to do what's called the employee after-tax contribution or the mega backdoor Roth, you could contribute an additional $38,500 or less than that amount if you have a higher employer match. This is going to matter, especially for those who are self-employed and own a solo 401k, because you're both an employee and an employer. So I'm going to make sure to mark my calendar at the end of December to adjust my contributions starting in January. Since I'm under 50 years old and get paid bi-weekly, I'm going to divide $22,500 by 26, which will give me $865.39. So I'm going to request my employer to deduct $865.39 every 2 weeks from my paycheck to my 401k, TSP, 403b, or 457. If you're 50 or older, your biweekly contribution will be $1,153.85 if you're looking to maximize your contribution to $30,000. If you get paid on the 1st and the 15th, then your contribution will be $1,250 for each paycheck with a catch-up contribution, or $937.50 for those under the age of 50 without the catch-up contribution. Now, let me show you the compound interest calculator with the 2023 contribution limits. And according to Vanguard, only 14% of participants invest the maximum contribution limit, and 60% of them make at least $150,000 a year. Maxing out the 401k is not until step 7 of my FIRE checklist, because you need to have the income or the margin to get there, right? I didn't start maxing out my TSP or 401k until I was debt free, had a fully funded emergency fund, max out my Roth IRA and HSA. My wife and I are collectively saving about 25% of our income towards those retirement accounts. And we're also saving an additional 30% of our income towards our early retirement. But let's say you're 30 years old and you have nothing invested in the 401k or TSP so far. If you decide to just max out your contribution at $22,500, and let's just say your employer contributes $5,000 to your account every year. With a 3% annual inflation increase to the contribution and an 8% average annual return from the stock market, you could have over $1 million invested in your employer-sponsored retirement account by the time you turn 45 years old. If you decide to keep working until you're 55 years old, you could retire with over $3 million in your 401k alone. And this is not even counting your other assets like your Roth IRA, HSA, and taxable brokerage account. You can get this compound interest calculator and my other financial independence resources for free by visiting firesetchat.com/contact. You can also check out the Fireside Chat shop if you're looking to start your own YouTube channel, and I have all of my equipment at firesetchat.com/shopping. The contribution limit for traditional IRA or Roth IRA will increase from $6,000 to $6,500 for the year 2023. The catch-up contribution limit for IRA is not subject to inflation adjustments, so it will remain at $1,000, which is a bummer in my opinion. And according to Vanguard, only 37% of US households own traditional IRAs and Roth IRAs. Guys, you need to open your traditional IRA and Roth IRA today. The contribution you make to your Roth IRA is separate from your 401k. So you could contribute $22,500 to your 401k and invest another $6,500 to your Roth IRA. $6,500 doesn't sound impressive, right? But over the course of 20, 30, or 40 years, you could increase your retirement income by millions of dollars. And I'll show you the compound interest calculator in a little bit. But the other thing you have to keep in mind is the 5-year rule. And you have to have your Roth IRA open for at least 5 years, even if you're 59 and a half, to withdraw tax-free and penalty-free. So if you're opening your Roth IRA at age 56, you have to wait until you turn 61 to start withdrawing from your Roth IRA. So you have to wait an additional 1.5 years from 59 and a half to start withdrawing your Roth IRA tax-free and penalty-free. You might also have a few 401ks in your previous employer 401k accounts with a few $1,000s in them. You might actually save some money on management expenses or fees by rolling over those your old retirement accounts to your traditional and Roth IRAs. And you can check out these several videos I made about the Roth IRAs, and I'll put those links in the description below. So let's say you're starting your Roth IRA this year in 2022. Keep in mind that you can actually contribute to your Roth IRA for the tax year 2022 until the tax deadline on April 18, 2023. You can't do that with your 401k or TSP. Those are just until the end of the calendar year on December 31st. So if you contribute $6,000 this year, $6,500 next year, and the contribution limit increases by $500 every other year, and the catch-up contribution beginning at age 50, with an 8% average annual return, you could have over 1.6 million tax-free dollars by the time you turn 60 years old. With a 4% withdrawal rate, you could have $64,000 a year in tax-free income from your Roth IRA starting at age 59 and a half. I have a full tutorial on the Roth IRA, and you can check out that video linked in the description below. For the 2023 Roth IRA income limits, the IRS raised the phase-out limits between $138,000 and $153,000 for a single and heads of household, which is up from $129,000 and $144,000. And if you're married and filing your taxes jointly, the income phase-out range is increased to between $218,000 and $228,000, which is up from between $204,000 and $214,000. So my wife and I can directly contribute to our Roth IRAs if our modified adjusted gross income is less than $218,000 combined right before the phase-out range. And if you're above the income threshold, you can still do what's called a backdoor Roth IRA, and you can check out this video for step-by-step guidance. And if you'd rather talk to me in person or virtually about your financial independence journey, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesetchat.com/coaching. You can also check out the IRS press release linked in the description below. I'm excited about the contribution limit increases for the year 2023 because every dollar I invest today at age 36 is going to exponentially increase over the next 25, 30, or 40 years. My wife and I have been aggressively investing for our early retirement at age 45. So we should have enough assets between 45 and 60 without ever working a 9-to-5 job. And these adjustments are designed by the IRS to keep our retirement savings somewhat on pace with inflation. And if you're still in doubt about the financial independence movement, you're not sure what to do with your debt, budget, or savings, what if I told you that I was once $110,000 in consumer debt back in 2014, but now I have over $1.1 million in assets in 2022? My FIRE checklist will work for you or anyone as long as you stick to it. And if you want to know more about how to invest in your financial independence and learn how to retire early, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.